Today I shall be analysing what a journal entry is, breaking down the small aspects while providing examples to help reinforce the information. A journal entry is a chronological list of firms' transactions, including the amounts and the accounts that are affected. Here's an example of a basic journal entry, with the four headings: date, accounts, debit, and credit. In most cases, journal entries are listed in chronological order, and debits are entered before credits. Definitions. What is an asset? An item of economic value owned by an individual or business that could be converted to cash. Some examples: accounts receivable, inventory, equipment, real estate, cars, etc. What is a liability? An obligation to pay an amount in money, goods, or services to another party. The balance sheet lists the liabilities, also called debt. Examples: accounts payable, notes payable, and salary payable, etc. Sorry, I just had to make sure you're still awake. Here's some jokes to liven up the mood. If an accountant's wife cannot sleep, what does she say? Darling, tell me about your work. What does an accountant use for birth control? His personality. Okay, now you're awake, let's get back on track. Scenario 1. Cash payment and transactions. Purchase of assets with cash. Let's say a business purchased merchandise and paid $1,000 in cash. The journal entry will look like this: merchandise, 1,000. Debit, cash, 1,000. Debit, increase in assets, merchandise. Credit, decrease in assets, cash. Scenario 2. A business goes to the bank for a loan, $5,000. The journal entry will look something like this: cash, $5,000 in debit. Borrowings, $5,000 in credit. As a result, as we just received money from the bank. Credit, increase in liabilities, borrowings, the money we owe back to the bank. That's all the wisdom I can share with you today. Thank you for listening.